The framework was originally developed over the course of 1 year through a series of 5 meetings with probably in total a few thousand people between government and private sector. It was heavily influenced by the private sector, including folks from the financial services industry and elsewhere. When it was released, it was to, I think, a fair amount of fanfare because it was one of the first times that government, in the US anyway, and the private sector, the broad swath of the private sector, had actually come up with something that everybody thought was pretty good. Not perfect, but pretty good. And that's a lot better than some of the public-private outputs that we see where private sector says government doesn't know what they're doing, government says private sector don't know what they're doing. So this was a pretty monumental effort. It was accomplished inside the space of 1 year, which was pretty awesome. So most recently, version 1.1 of the framework has been released. It incorporates, among other things, a lot of supply chain elements. So if you're in a supply chain, which almost everybody is, there's a fair amount in there to help sort of guide your risk management practices there as well. It's composed of 3 parts. There's a core, which I'll show you in a second. There's implementation tiers, which I'm not going to show you because what we're doing in financial services is a little different. So I'm going to talk about what we're doing there with tiering. And then the profiles, which of course is the basis for what we've developed. And then the core is a set of best practices. You're going to see a lot of things that you're very familiar with if you're working in cybersecurity, mapped to US and international standards. All right? So this is the core. Probably a little hard to read there. I apologize for that. But the things I want to draw your attention to in particular, on this left-hand side, the framework breaks things down into these 5 functions. What these stand for is identify, protect, detect, respond, recover. All right? We could run day-long seminars on each one of those, but we're not going to. That's not what we're here for. But what I want you to understand is that there's 5 functions. Inside of that functions, there's a bunch of different categories. And if you work in IT, if you work in information security, these are all going to look really familiar. Asset management, risk assessment, detection processes, analysis, mitigation, so on and so on. Right? Not reinventing any wheels, pulling from what's already out there to try and build something comprehensive. Underneath all of that I didn't display is over 100 subcategories that fall into different categories and then, of course, under different functions. No sense in displaying those. I've got a graph that'll give you an interesting thought on, or an interesting idea of what that means. So finally, the part that matters, I think, most here today is this notion that the framework talks about profiles. The idea was that in the original framework, we had 98 subcategories, right? That's a fairly high number. Now, it's a lot less than what you would find 853 controls, right, if you're familiar with NIST 853, but it's still a fair number of controls that your organization would need to look at to try and say, oh, which of these things do I need to do? So what the framework allows you to do is it can say, whether it's for an organization or a sector, even focused on a particular threat model like DDoS, it can say of all of these 98, it's now actually 103 or 105 controls, which are the ones that matter most to me? What are the highest priority ones? What are the areas that we want to focus on? Right? So originally, the idea was an organization would make that decision. They would go through their risk management process. They would decide, here of the 98 controls, here's the 70 that we care about based on our risk. Those are the ones that we're going to build our program to and around. But it was adopted by sectors as well, including the energy sector and the financial services sector, with the goal being we have enough in common in the financial services sector that we should all be building towards the same sort of standards around managing our risk. So why would it matter so much that we need to build to a common standard in the financial services sector? Well, this is part of the reason. Now, you can't read this, and amusingly, the bottom, the footnote that you also can't read says, yeah, this is pretty complicated, but it's actually way worse, right, is what that footnote says. What this is depicting is the US financial service regulatory landscape. So if you're a bank, if you are a credit card company, anybody that sort of lives in that space, you have an awful lot of government agencies, including state, local, and federal, and quasi-governmental agencies that are always looking at what you're doing. I have friends in the financial services sector who work at banks. They have entire teams that spend 24/7, 12 months a year dealing with compliance, dealing with audits. They can have as many as 12 audits going on at one time by outside organizations because there are so many of them just across this top range. All right, so this is a pretty complex landscape. So if you're responsible for meeting compliance, if you're responsible for being able to say, yeah, we're protecting our data, or yeah, we're protecting our systems, you've got an awful lot that you have to prove. And the challenge is that in many cases, in fact, most of them, what these organizations are looking for is similar, but defined differently. So there's no common way of saying all of these agencies along the top are all looking for the exact same set of things. Notionally, in many cases, they are, but at the specific level, at the granular level, it can be varied. And that gets very expensive. It gets very complicated for banks and others to be able to do this. They're spending a lot of money to meet compliance in this space because of the complex regulatory environment. So, does this help? I'm not sure, right? This is a different way of thinking about the challenge when we start thinking about the cybersecurity framework. So what are we looking at? So what we've done is we've taken all of that stuff from the last slide and we've tried to map it down and compress it into something. But here's what you end up with. So over here are some of our regulators, right? FFIEC, FTC, others. Here you've got all the NIST subcategories I've talked about. I can't decipher that. I don't know. This, you know, you'd need a microscope to be able to go in and say which one of these regulations maps to which thing. This should say categories. I apologize. That's a typo. So now it gets to be a little bit more manageable, and we get over to functions. And we can see, all right, we can take all of these regulations that are out there, everything that I've got to meet compliance for at my bank, and now I can start to break it down in ways that maybe are a little bit more helpful. So instead of dealing with 20 different compliance requests and 20 different documents from 20 different agencies or more, now I can start to think about the problem a little bit more cohesively and a little bit more holistically. Because what I'm doing underneath all of this, as you'll see, is I'm mapping my own risk. Never mind what the agencies want me to tell them. It's what am I doing to manage my own risk on behalf of my organization, on behalf of my customers. And it starts to pivot into this. Interestingly, you'll notice that a lot of the regulations seem to fall under identify and protect. We could probably spend the afternoon talking about why that is. My personal opinion is that it has to do with the maturity level of the regulatory agencies. Right? If you think about sort of the cyber hygiene model, you can't manage what you don't know about, so we need to have good asset management, we need to have good vulnerability management. Those are things that fall under the identify function. We need to put protection processes in place. What are our firewalls, our IDS, IPS, so on and so forth, and a lot of those fall under protect. When you start to get to other places in the risk management, there's a lot less regulation there. So that in itself is interesting, and I wish we could talk more about that, but I'm going to keep moving here. We're doing good on time. All this making sense so far? This is a small group, so if you've got questions, just raise your hand at any point. Help me know that somebody's listening, anybody. I know you had to like wander a maze to get over here, but we all made it. So, but yeah, I'm happy to delve into anything deeper as we go through this. All right, so now let's kind of break it down into something even a little bit more digestible. So we saw two slides that basically are impossible to parse unless you're a machine. So now we start to think about, well, how can we take all of that and start to turn it into something that not just my organization, but in fact our entire sector can use. So this is what the profile structure looks like, and there's a couple things I'll draw your attention to. One of the things that we did was we loved what NIST did with the 5 functions, right? So remember, identify, protect, detect, respond, recover. But what we found was that there were some gaps in that that didn't quite align with how the financial services sector, in particular a lot of the bigger banks, were thinking about risk. And so we added a couple new functions to it, right? And they overlap, and they're very coherent with the rest of them, but we added a couple. We added a governance function, and we added a supply chain and dependency management function. Now, since then, NIST has done more on the supply chain side, which is great, but we're going to hold on to this function because there's things that we've added in there that, again, are very specific to financial services. So we didn't change anything in the core framework, nothing. That's all exactly the way that NIST has released it. But we wanted to add some pieces in order to make this more useful for the financial services sector. So, categories, just as it says here, same column as in the NIST CSF. Some categories have been moved, like I said, into the other functions. They haven't been changed in name, they haven't been changed in definition, but they've been moved around. Subcategories, same thing. We kept all of the ones that NIST had, moved a couple around, and we've added some, right, to build it out. And then finally, what we call diagnostic statements. I'll show you an example of this. But these are, think of these as ways of helping you to start thinking about how do I measure the risk. So it's great. So you tell me I've got to do asset management, that's fine. Okay, so what? How do I measure that? What are some standardized ways that I can go and actually start measuring how well I'm doing asset management or vulnerability management? So we have these things called diagnostic statements that are in there as guidance. And bear in mind, I should have started with this, the Financial Services Roundtable is not a regulatory body, right? So this is not something that's coming out as a new regulation, as a new requirement. This is something that, as I mentioned, is designed to help deal with all of the regulation and requirements that are already out there. So So putting these diagnostic statements in is meant to be helpful. It's meant to provide guidance for organizations that may need to better understand, well, how do I know if I'm doing what I'm supposed to be doing? How do I know if I'm doing a good job, right? I need to be able to measure that. I need to be able to communicate it. And then finally, it goes back, just as we've been talking about, out into some of these financial services specific regulations. Clear as mud so far? I got nods, that's good. So I'm not doing a very good job because you're saying it's clear as mud. I got it. All right, so what are the benefits of using this profile approach? So this is sort of a summary of some of the things I've already talked about. We've reduced the cybersecurity administrative burdens, right? So go back to that first slide I showed you again. Think all of that regulation, think all of these controls that are out there, hundreds of them, several hundred of them. Having a profile that the industry can agree to, the financial services industry can agree to, helps to scope that down, right? It starts to give everyone a common way. And it doesn't matter whether you're a big bank, a small bank, or wherever you fit into that mix. It starts to give you all a common way of saying, okay, I know what my target needs to be. I know what sort of cybersecurity program I need to be building. You're probably already building it, or you already have it, but now you have something that the industry is saying, this is what we think we need to be doing. And it then becomes a common voice out to the regulators. Enhanced internal and external oversight. So if you have a common way of talking about risk, a common lexicon, a common set of things that you're looking to do, it makes it easier to communicate. One of the places where the NIST framework has been helpful just overall has been with third-party management. So if I am procuring services from you, we've got a partnership, whatever the case may be, I care about what your cybersecurity risk profile looks like. Because if I'm giving you data, if I'm giving you my customer data, financial data, whatever the case may be, I'd like to know that you're doing good things to protect it. And most contract language, even still today, basically says, you know, you agree to apply industry best practices, blah, 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 right? I said I'm not a lawyer, but I work with a lot of them. So I see a lot of these contract languages, right? That's not useful, right? If you don't have that industry best practice to point to, then what does that really mean? So if my partner lets me down and they've got a breach and they lose my data, you know, what really is my recourse if that's all my contract language says? So one of the things that the framework is being used for is to be able to say, you, partner, agree to adhere to these elements of the NIST Cybersecurity Framework, right? And to measure these things and to report on them if that's part of what the deal requires. But now we've got a common way of communicating it. It's not your homegrown risk management framework against my homegrown risk management framework. We have one common way of discussing it, one common way of framing it, and then communicating when things go wrong about what controls didn't you do? How were you able to have a breach? All right, let's think about that. Let's think about what led to that breach. What part of the framework do you need to build out in order to reduce the likelihood of that occurring? So that third-party management risk has actually been an area where the framework has been really helpful. Greater inter-sector and cross-sector international cybersecurity collaboration. Again, same idea, but now when you're looking across sector, and obviously the financial services sector interacts with pretty much all other sectors, right? So if other sectors are using it, again, you've got that same sort of be able to go back and forth, be able to start assessing or thinking about understanding, assessing, and managing risk in a more common way. So you have a better chance of avoiding that he said, she said type arrangement. Enhanced collective understanding, I've mentioned that. Improved boardroom engagement, and this is one that has been really interesting too. You know, when the framework came out originally, it's not a deeply technical document, but it does fall well below where most boards would be interested. But what we've discovered was that it started to fill a really interesting gap between the technologists and the people that they were reporting to. And if you've had to do that in your career, you know how challenging that can be as a technologist to be able to report up to a CEO or to a board that may just not have the expertise, right, or the understanding or the knowledge. Because of some of the press that the framework has received and because of the adoption by a lot of large organizations, boards have a tendency to know what this is, right? They're likely to have heard NIST Cybersecurity Framework more so than they may have heard of COBIT or ISO 27001 or whatever the case may be. Those are all perfectly good risk management frameworks, but they don't have that same level of attention at the board level that we've seen with the framework over the last couple of years. And in part it's because of the way the framework was developed by a lot of big companies and small companies and the fact that it has been publicly discussed by a lot of these large organizations, saying we're using the framework, or here's how we're using the framework. So we've started to see boards get a better understanding. So if you're responsible to reporting up to a board, using the NIST Cybersecurity Framework to help you frame that discussion of risk is probably only going to be a positive, right? You certainly won't be any worse off if your board doesn't know anything about cyber. Greater innovation at technology companies, including financial services startups. So why is that? Well, in part it's because we heard Dr. Ross this morning talk about the importance of building security in, and I'm sure that you've heard that time and time again. We've got to build security into these devices and our applications. Well, what does that mean? If I'm a startup and I've got some cool new app or some cool new cloud service, what does it mean for me to be able to say, well, I'm secure. I'm doing the things that I'm supposed to be doing to secure this. I've built in the right mechanisms. Having a profile like this for those companies gives them a target to look at. They can say, hey, I get it. I understand that the banks that I want to sell this software to, this is what they care about, right, in very clearly understood terms. I know that my application, which fits in this piece of the supply chain or this part of the infrastructure, needs to be able to meet these security requirements. And I'm going to be building to the exact same controls that the bank that I'm selling to is building to, right? So it can be hugely valuable from that perspective. And the inverse is true. So if I'm a bank and I've got a startup saying, hey, I've got this cool new whiz-bang thing, going to save you a lot of money, make things easier, whatever, and my question is, well, how are you securing it? Now that startup has a common language to be able to say, I have applied these things from the financial services sector profile. And the bank goes, I know exactly what you're talking about because we use that too. So it has a lot of applicability as this thing continues to gain traction. Making sense so far? Everybody good? Yes, sir.
I do have a question.
Please.
I know you mentioned the FIEC cybersecurity assessment tool in the previous slide. I was going to hold off till later.
Mm-hmm.
How does this dovetail, complement, differ from the CAT? Because the reason why I ask is that coming from financial services, there's been a lot of effort to, even though it is not mandatory, it kind of is, regulators across all the OCC and FDIC and so forth are expecting that you're going to align with it. So how does this relate to the FFIEC?
So it relates, right? So FFIEC, like you said, is one of the organizations that we had up there on that chart. Right. They've been involved in this effort. And what's driving this primarily, though, has been the banks that need to try and meet FFIEC. Because what they're also saying, this goes back to my earlier point, is, okay, yeah, I've got to do that, but I've got to also do all these other things. So this is specifically an effort to try and bring those pieces into alignment, right? It's not meant to be a replacement, and the CAT tool is very, very useful. There's some other tools related to this that you can also go and see, and it's all mapped. So here, perfect. So here's an example from the profile. So let me show you some things here. So this is sort of bringing together all of the pieces that I talked about. So this is one example out of the financial services sector profile. So here's our functions. Over here we're going to talk about governance. Remember, that's one of the ones that the financial services added to this. We've got a category. It falls under policy. Organization established cybersecurity policy in support of its cyber risk management framework technology. Okay, pretty straightforward. The subcategory we're talking about, the policy has been established, has been approved by appropriate governance bodies. Again, pretty straightforward. That's only one of the actual subcategories under policy. It's got a reference ID. Here's the diagnostic statement I talked about. So for this one, right now, it's the organization maintains a documented cybersecurity policy or policies approved by appropriate senior officer or appropriate governing authority. That's actually pretty simple to measure, right? Do you have the policy, yes or no? You might not be able to find it right away, depending on the nature of your organization, but you either have one or you don't. Did the appropriate authority sign off on it, yes or no? Those are two binary questions. Doesn't mean they're not hard to figure out, but they're binary questions, which means from this statement's perspective, you can actually say, yes, we have a policy, yes, it was signed off on. Good, you're doing it, right? You've met the status, you've met the criteria to be able to say we're doing this thing. And here's some of the potential responses, right? Not applicable. I'm not sure why you would ever use that for a security policy. Don't do that. You should have one. Yes, it's risk-based. Yes, it uses compensating controls. It's partial. It's not tested, or no. Okay? And these are just examples, right? This is a draft document. These will refine over time. But hopefully it's starting to make sense in terms of how you might be able to use something like this. Now, coming back to the other point. So this says here, FFIEC 1. right? So what we're basically saying is that within the way that the FFIEC talks about risk and controls, everything that's in here is mapped to one of those things that the FFIEC has. So if you're working in inverse order, that is, if you're working to get compliant with the FFIEC, great, do that. Come back to here, and now you map in the opposite direction, right? And what does that tell you? So if I'm FFIEC compliant across the board, well, guess what? That also buys me NYDFS 500-03, right? I don't even know what that one is, but it's in there. There's a lot. And then, if you care about it outside of the financial services sector, now you've got mappings into other things. This says COBIT, here's ISO 27001, here's NIST 853, and so on. So, to some extent, it doesn't matter where your starting point is. If you're building towards some compliance regime, this profile helps you to, as an entry point to bring what you've already done into it and expand that into other areas. And that's ultimately what we hope the outcome will be, is that you'll be able to go from your starting point and be able to start answering other regulators and other auditors much more quickly and with much less expense, because you will have already, done it in part through this profile. Questions about this? Is this making sense? Does anybody see how this might be useful in their organization, or is this just like, hey, this is cool, but I don't really care?
And we've preached best practices for a long time. And until NIST began to flow into DFARS and some of the contractual requirements, people have really, paid lip service to best practices. And, I think the banking industry and the healthcare industry kind of been forced to ramp it up a little bit. And so it's nice to see this flowing into the other industries and making it a more strategic component of how we do business. And getting some education around what are these standards, and it allows the IT staff to be able to say, look, I'm not just making this up to be difficult. This is a standard, and this is where the standard is used, and this is how it's going to be audited. So I think it's fantastic, and I just want to, I want to thank the people that were involved in flowing this out, and I think it's just the beginning of really securing data across, a lot of verticals.
That's great, thank you, I appreciate that. And that's absolutely right, it's a good way to phrase it, right? There was a leader here in terms of what NIST and others did to build the framework, and the original framework had financial services companies involved in its development right from the get-go. So they, like others, the financial services that is, have taken this and expanded it, just as the federal government has taken it and expanded into things like DFARS and so on. And we're going to see more of the framework in government since the cybersecurity order. So we'll start to see more of that as opposed to just talking about 853 and the 800s, 171s and all those pieces. We're going to start seeing more of the framework across government as well.
And just another quick little tidbit, when we did our own NIST assessment, the most vulnerable component of what we had as a Microsoft partner was our financial cloud service, third-party application. Not at all, FedRAMP certified. It was the single most vulnerable component of what we had in our own network. So, it was not simple to fix, and there's a lot of work to be done still.
Yeah, no, that's right. Now, none of us are going to be out of work anytime soon, I don't think. I don't expect to be anyway. Okay, so when you go and look at the profile, right, which you can find online, you'll see that there's a whole bunch of these things, right, and it hopefully will start to paint a picture for you. All right, let's keep going. I want to be conscientious of time here. So the other part of this that matters is where you fall on the spectrum. So I know not everybody here is in financial services, but if you're in financial services or if you're in any sort of critical infrastructure sector, this type of tiering is impactful. Because what we're talking about here is, so I know it might be a little hard to read, but it's basically broken into 4 levels, right? So this one, level 1, you have a national or supranational impact if you were to be compromised. So if you are a bank and you fall into this category, or rather you would fall into this category if the impact is of a cybersecurity incident of some sort were deemed to have a national or supranational impact to the system, right? And in fact, financial services recently, I'm sure you may be familiar with the FS-ISAC, but they also recently stood up a new organization called FS-ARC, which is specifically designed to look at systemic threats. That is, what are those threats that are out there that could be potentially, could bring the markets down, could cause massive financial loss, massive issues from a cybersecurity perspective. Organizations that fall into this category, they know they're in this category, right? Generally speaking, you don't get to decide whether you're in this category or not. It's already been decided for you. You've got the Section 9 entities, which anybody that's worked in government might be familiar with that. It's a classified list of companies around the United States for whom it's believed that any sort of negative impact to them could cause catastrophic damage to the U.S. So they got to be knighted. You are a Section 9 entity, right? And that comes with some additional government oversight and interaction and, in fact, some benefits as well. But once you kind of get below that, right, there needs to be a system to kind of help your organization figure out, where do I fit in the mix, right? You may be able to say, I'm a big bank, I'm a little bank, I'm a regional bank, whatever the case may be, but we needed to build some rigor into that so that we could make that a little bit clearer and a little bit easier to manage. So it sort of goes down from there. And just, quickly, subnational, mission-critical services, high number of services, not designated as most critical. Provider of services down here under level 3. Could be risk to an organization or to a region, but wouldn't necessarily be systemic. If a regional bank, say here in Huntsville or somewhere, were to be negatively impacted by a cybersecurity incident, were taken offline, that would be horrible for that bank. It would be horrible for the people of Huntsville, but on a national level, it may not rise to that level of a threat to the United States. All right, so we need to be able to make those determinations. And then finally, localized impact, right? So that, again, it's important, but not necessarily important to the safety and security of the nation as a whole. So some of the ways that we kind of break this down, I've already talked about these. There's North American government designations. Again, that's Section 9. There's some other designations that go into that as well, where the government basically says, yeah, you're that big. Too big to fail, I suppose, would be one way of thinking about it. Interconnectedness is the other piece, right? You may be a smaller organization, but you may be at a critical juncture in terms of payment processing, in terms of clearinghouse, in terms of whatever you may be doing, that if you were to be negatively impacted, the ripple effect across the entire system could be pretty significant. All right, so it's not just about the size of the organization, because criticality has to do with what would the impact be if your organization were affected. Geographical and geopolitical factors, for example, where do you host your data? Right? Is your data hosted here in Alabama, or do you have a big data center, say, somewhere in Syria? That's probably a bad example, but you get my point, right? Probably not the safest place to host a data center. So the point being is that we're looking at those factors and saying, what is the risk that you have? And then consumer impact, right? How many consumers are going to be impacted by something bad that happens to your particular institution? And all of those things factor in. So all of that's well and good. But we wanted to be able to create a more rigorous process by which organizations could sort of self-assert, that, or self-assess rather. Again, outside of the Tier 1, which in most cases those organizations already know who they are. So what we did was we've created a list of questions that are sort of cascading. You sort of go through them, and there's off-ramps. So when you hit a question where you say yes or no, there's instructions that say, okay, this is your off-ramp, you are Tier 2. Or you've made it all the way to the end, you are Tier 4. All right, so an example of that is this one. So this is an example of an off-ramp for Tier 1. Okay, does your organization consistently clear or settle at least 5% of the value of transactions in a critical market? Check all that apply. So you're looking across all these different markets. If you say yes to any single one of those, that is, you're doing more than 5% of the total transactions for, say, federal funds or corporate equity securities, Tier 1. That's your off-ramp. You don't have to answer any more questions. You're already designated as a Tier 1 and all of the things that come along with that. But then there's lots of other questions underneath of that. So you say no to all of them. Okay, then you get to the next question, right? And there's other questions. And I've got some links where you can go and see these things. So you can start to assess and say, and then if you get all the way to the bottom and you haven't answered for any off-ramp, then the final off-ramp is your Tier 4. Okay? And then once determined, that tier generally stays the same, right? There's only a couple of conditions where it would change. One would be as if the nature of the organization were to change, right? Change an event. Maybe it grows, 2 smaller banks merge into 1 big bank, so you need to reassess and figure out, are we now Tier 1 or have we gone from a Tier 4 to a Tier 3 as a result of that change? That can happen. Could be other triggers, but growth generally would be one, or if you've entered into a new space, right? Remember I said it's not just about the size of the organization. If you introduce new services or new products that may introduce you into a different part of the financial infrastructure, that could change your criticality as well. And then there's periodic controls assessments, right, to make sure that you're still doing what you need to be doing within the profile based upon your tier. Okay, so I'm going to leave just a few minutes, hopefully for some questions. Otherwise, I'll tell some stories or something. Next steps, this is a little out of date. We had workshops at NIST, actually. I was actually at the Department of Commerce in April, where we had a bunch of folks come together, talk about the current state of the draft profile, it was a lot of banks, it was some government, and banks of all sizes, right? And I facilitated a number of the sessions, and it was really interesting for me because, we had sessions that were targeted for the smaller banks, so regional and local banks. And it was great to see them engaged and great to see them thinking about it. I work a lot with the big banks, and they're always thinking about this problem, right? They're always thinking about cybersecurity. But it was great to see that smaller institutions are now starting to think about it as well. That's not to say that many haven't, but there are many who are still a little bit behind the curve, and they understand that, and so they're getting engaged in efforts like this to be able to understand, well, what can I be doing? Where do I fit into the mix? What's available to help me, and so on. End of this quarter, we're going to incorporate the feedback from the workshop. I guess that may have happened since the quarter, I think, is over. Overlay the impact tiering with the profiles, and we're going to finalize a version 1.0. I think we're just a little bit behind on that, but that should be coming soon. And then moving forward, we're going to start to see its utilization across the entire sector. So it will start to promulgate out. As I mentioned, a lot of the big banks, I just met with JP Morgan Chase a couple weeks ago. They're huge supporters of this. So they've been tracking it. They've been contributing to it. They're going to be looking at how do we utilize this across our organizations? How do we push it down to other organizations that we interact with? Promote domestically. Obviously, that's where we want to start. We want to start with national security first. But certainly not limited to that. The financial system obviously is an international system, right? It is not just a domestic system, but we think about critical infrastructure domestically, but we need to think much more broadly than that. So we need to think about what does this mean internationally? How do we socialize this with international regulators so that, again, it starts to bring that regulatory management down into something that can be done in as most efficient as possible, which saves everybody time and money. So I've got a few minutes left. I know that was a lot. I know that, again, not all of you are in the financial services sector, but I'll remind you that even if you're not, think about how a profile could help your organization. So if you translate these ideas of, okay, I want to simplify my risk management, I want to be able to communicate with my partners, my supply chain in a way that is more consistent, that is well-defined. These are all things that almost any organization can use. You can do it as a single organization or within whatever sector that you're in. So let me stop there, and I'll take a few more questions or comments or whatever.
I have a question.
Uh-huh.
We looked hard at NIST. How do we actually execute and implement NIST compliance? And there's really, a lot of challenges around doing that. I don't see NIST really offering solutions on how to execute that using existing third-party solutions. And primarily, we have looked to Office 365. How do we configure a tenant to be NIST compliant? And I don't see NIST having that conversation. Is that because there's a separation of we're not going to endorse, a solution? I just don't see a good conversation on, deriving that actual execution.
Yeah, I think
I kind of feel like the standard says, hey, here's the standard, and good luck.
Yeah, no, but that's, so I worked at both NIST, I worked at Microsoft as well in the Azure group and dealt with the standards I helped to develop, but on the private sector side. So I've lived both sides of that, right? So dealing with 871 and the DFARS and so on from the Microsoft perspective. So it really kind of boils down to the thing you said, which is there's a lot within the federal government. Obviously, there's separation of authorities. NIST has no authority, right? They can't dictate anything to anyone. So they develop a standard of some sort, whether it's an 853, which is really not even a standard, it's just a huge catalog of controls, okay? It's up to other organizations to decide what compliance means, right? There is no, NIST compliance is useful shorthand, but there is no NIST compliance program. NIST doesn't run a compliance program for 853. Now, you may have the DoD say you need to do these things from NIST, like 871 or whatever the case may be, but that's what you're complying to. So where the help often has to come from is from whatever organization that you're trying to sell to. Again, from an Azure perspective, much like Amazon, we had certifications out, out the door, because not just for locally, whether it's FedRAMP or whatever, but we were certifying to those things because that particular customer was saying, here's what I want you to do. Now they're using NIST, and they're going to start using the NIST framework, but it's going to be those organizations that set the standard. That said, NIST does provide some types of guidance around how do you actually do risk management, but they're not going to say you're doing a good job or a bad job at risk management, right? Or they might say, here's some great things for small businesses to think about, right? They recently released a small businesses guide, but they're not going to say you're doing a good job or a bad job. Somebody else will make that determination, and within government it could be DHS, OMB, could be GSA, or every individual agency or system security officer who decides this is what compliance looks like and what security looks like, and so you have to build for that. So what's different here is what we're seeing is that the financial services sector is saying, we're actually going to kind of step out in front and say, here's what we think good means, so that we're not all making it up as we go along. I think the government is going to do the same thing. They have to some extent, if you go back to the CAP goals and other things that have been in place for a long time. But the government hasn't necessarily done a great job of coming together and saying, here's what good really means in a standardized way. And I think we're seeing that in some of these sectors, and hopefully the government will be able to learn from that and pick up on some of these things and be able to start saying, we can reach agreement so that it's not every agency who says, I decide what's secure and what isn't. Because that's clearly not what happens. Every agency makes a lot of their own determinations. Other thoughts or questions? I don't see anybody clamoring for the door yet, so we probably have another minute or two.
All right, so I'll do it again.
Go for it. I love it.
I mean, we live this, and I think it's fantastic to see the standard coming together. But what I fear is until there is truly a regular audit arm, until the agencies that are adopting this, really agree on how are they going to enforce this, I think we will still see a lot of people pay, lip service to it and not really execute through action items to complete actual compliance.
Yeah, so I mean, look, I don't mind getting up on my former government soapbox a little bit because I lived this, right, with the National Security Council. The issue isn't that people don't know what to do or that they haven't been given guidance on what's to do. It's that there's little to no accountability, right? Agencies get hit all the time. The only time I know of anybody that ever lost their job as a result of a breach within the federal government was at OPM. That wasn't the last time the government got breached, by the way, right? And I'm not sure that anybody else has really lost their job as a result of that. So in the absence of accountability, it's not going to be, I didn't know what to do, so don't punish me. It's you did know what to do, and now you are going to be punished, whether it's through appropriated funds, whether it's through losing your job, whether it's through other types of issues. So I think the government's problem is an accountability problem. And that's not to say that the government are the only ones that suffer from that. Private sector tends to have a little bit of an easier job of saying, you were hired to do this job and we paid you a bunch of money to do it. You clearly failed to do it. We're now going to replace you with someone else. It just doesn't happen in government that often for a whole host of reasons we could spend the day talking about. But we're not going to see the change you're talking about until that attitude changes. Because OMB has the authority to do it. They have the authority to say, here's what you have to do, and they actually go and they measure it. Right? We just saw a report come out, what was that, a week or two ago? 29 agencies or something like that with failing grades. Okay, now what? Right? What's going to happen as a result of that? And it's a complex problem because you don't want to take money away from agencies that perform critical public services, but we've got to strike that right balance. So I think efforts like this to try and drive common ways of thinking in a particular sector, and of course public is its own sector, I think will help. No such thing as a silver bullet. We all know that. We're not going to solve all of the problems, but this is a really, really important step. And I think the fact that we're seeing so many institutions in the financial services sectors who compete fiercely with each other, are coming together and saying, we need to put that aside for a second and come up with a way of solving this problem that we all face. Shared problem, shared solution. And it's true in other sectors. Energy sector's done something similar to this. I think government's trying to do something similar to this. So that's the mentality that we need. It's a ubiquitous challenge. We all face it. We need to come up with shared solutions so that we can get back to competing in ways that don't damage our national security or economic prosperity. I'll take one more question. The hook has not come out yet, so, or comment. I'll survey the audience then. Was this at all useful? Be honest. I've got a very thick skin, so if you didn't like it, that's okay. 2 people liked it. Okay. Okay. All right, 3 people liked it. 8 people did. Oh, there's another one. People are being shy. There's a couple more. Thank you. Whew. Yeah, I know. Well, I had no idea sort of what the setup was going to be. But I think these are available on the site, so you can go and download those. I forgot to put the link in here, but if you just go online and put in FSR NIST profile, you'll find this, and you can go and download the whole thing. I did have one other. Oh, I took it out. Oh, well. I did have a slide in here. Oh, here. So this is in the slide deck as well. It's after the thank you slide. There's some links in here you can find. So here's where you can find the profile itself and the risk tiering. There's a downloadable version. The American Banking Association has actually developed an interactive cyber risk tool that uses a lot of those questions and stuff. So you can go and grab that as well. And again, it's in the slide deck there for you. All right, well, I guess if that's it, I'll wrap it up. Thanks for winding your way over here. I appreciate the time. Have a great rest of your day.